Hey, what's up, guys? My name is Josh, and I'm with MoneyLifeWax.com. And today, I'm going to share with you how this couple was able to pay off $180,000 in student loans in just 3 years. And that couple I'm referring to is my wife and I. And so let's get right into it. So as you can see, in November of 2016, we had $262,000 in student loans. And actually, at the time when I wrote this article in November of 2019, we had $78,000. Currently, we're less than $50,000 and we'll be done this year. Now, you might be saying, like the quote right there, holy shit, how in the heck were you able to do that? Well, let's get a few things straight first. First of all, most people do not have six figures in student loan debt, let alone multiple six figures. In fact, when I met my wife and we got engaged in 2015, we had over $300,000 in combined student loans. Now, when you have that much student loans, we were very fortunate to have jobs that paid pretty well. I was an assistant athletic director, and she did get her doctorate in physical therapy and was a pretty solid earning when she got out of college. Even though we made a good income and combined we were in the six figures, we still had some hefty student loan payments to make. So today, using this article, I'm going to share with you some of the things that we actually did in order to help us pay off our student loan debt. Now, word of caution, if you Google how to pay off student loans, the big dogs, the nerd wallets, the student loan heroes, the business insiders, they'll all say things like refinance your student loans, use income-based repayment, wait for public service loan forgiveness. Not trying to hate on those things, but we did not wait around for any of those. In fact, in 2015, when we used income-based repayment, we actually had our interest grow $17,000, which is why we started taking our loans serious in 2016. And as you can see, we did some pretty cool stuff that I will share with you today in this video. But the first thing I like to talk about is taking baby steps. And what I mean by that is, look, if you look at it, $300,000 or even $100,000 or even $50,000 student loans, that is a big number and it's scary. $50,000 is a lot of money. So 4 years ago when we had a $300,000 student loan stockpile or $262,000, we were really scared to try to attack that. And so what we did is we started taking baby steps. What are things you can do? Well, the first one, learn to say no. You have to say no to going out all the time. You have to learn to say no to every wedding across the country. You have to learn to say no to every bachelor party. Believe it or not, those things add up. The average millennial was spending $15,000 in their 20s, I read an article one time, to go to weddings. So the first thing, learn to say no. Most of your finances go to your lifestyle. Redirecting those finances to your student loans is a must. The next thing is recognize that most people's advice when it comes to student loan simply suck. They're a very new problem. A lot of people don't have student loans that are telling you what to do with them. So a lot of times, for example, I love my wife's mom, they just said to refinance. But had we refinanced $265,000 of student loans into one big loan, we would have been royally screwed because we would have lost the liquidity to attack individual loans. So, always talk to an expert, keep an open mind, but more importantly, find people that can help you and read a bunch of articles. Next, you have to cut your spending. Whether you decide to use the debt snowball or the debt avalanche, the key to all this, guys, is making extra payments. And the key to making extra payments is having money to do that. So, some of the things we did is we stopped eating out altogether. We cut our gym membership for 3 months. We got rid of cable, not 3 months, 3 years. We got rid of the extensive shopping sprees. We stopped traveling. We had a very small, minimalistic wedding. Next thing, especially millennials with student loan debt, housing cost. You gotta live lower than you gotta live below your means. Some millennials are spending 50 to 60% of their income on just rent. That number needs to be less than 25% if you're truly serious about paying yourself first and paying off your student loans. Housing costs are the number one budgetary item in most budgets. So, that being said, how do you minimize your housing costs? The first thing, find a roommate, find a basement. Don't rent a one-bedroom apartment. Don't rent a two-bedroom apartment. Apartments are the worst thing to rent. Find someone where you can room share and pay $400, $500 and cut your housing costs not in half, but even maybe 66%, 75%. That way you have more money to throw at your student loans. That was something we were very fortunate about. We even rented rooms at our house as a married couple to help supplement some of that income. Transportation. Some people they don't like this, but you have to drive a cheap car if you have student loans. In my opinion, if you have 6 figures in student loans, you cannot be spending 20-25% of your income on a car. It needs to more be like 4%, 5%. So we drove old busted Kias around that were paid off that allowed us to free up more money to throw at our student loans. But keep in mind, it's not just about the car payment. You have the car payment, you have insurance, you have gas, and depending on where you live, even personal property taxes. So that's very, very important to get those cars paid off if possible to free up the cash to throw at your student loans. Lifestyle. I mean, everyone knows that that's the make or break when it comes to paying off your student loans is your lifestyle. Can you say no to things? That's important. But can you stop your lifestyle or temporarily put it on hold for a couple of years to attack your debt? And that really boils down to knowing your why and really managing your social life and finding ways to be social without spending a bunch of money, whether it's on Airbnbs or Ubers or going to weddings or eating out. All those different things add up. And really the biggest reason why most millennials are in debt is actually their social life. I have a great article that talks about that too. That's my wife and I. Hello, Josh and Lauren. Our wedding. Weddings are freaking expensive. And so if you're a couple looking to get married, not going to lie, having 2 incomes makes it easier to pay off student loans. No doubt. We live off my income, my wife's income, 100%. Every single dollar goes to her student loans. So I get it. If you're single, it's going to be a little bit more challenging to pay off your student loans, especially if they're in the 6 figures. But if you do go get married, or you're engaged, weddings are freaking expensive. So you can do things like cutting the guest list. Don't worry about having that fancy of a wedding. Only serving beer and wine. Cutting costs on flowers by doing them yourself. Don't worry about what other people think because ultimately they don't pay your student loans. And then lastly, be open-minded. So I said I was going to share with you a really cool technique we use to pay off student loans. Well, most people cannot wrap their brains around this, and this might mean a follow-up video, but here's basically what we did. We have a lot of equity in our home, in the townhome I bought in 2010 when the market was low. Because of that equity, we're able to optimize equity. Equity is a dormant asset. It only is an asset when you go to sell. Well, since we don't plan on selling anytime soon, we took out what's called a home equity line of credit, a HELOC, and we used that to make a $40,000 student loan payment. Why would we do that, you might ask? Well, for one, it paid off some of the smaller student loans and it freed up cash to throw at the bigger student loans. Secondly, we got ahead on the principal, so the interest was not killing us as much on those student loans. It doesn't even matter if the HELOC interest rate's higher, because think about it, $300,000 at 5% interest is more interest than $40,000 at 6% interest. However, the HELOC was actually less than the student loans, so we were able to pay a huge payment at one time. Then we redirected all our money towards that home equity line of credit, paid that down, and then paid off it again. And that's a video I'm going to make going into details, but that is honestly the biggest reason why we've been able to pay off so much student loans. And you know what? If we can pay off that much in student loans, you can too. But here's the final 3-point wrap up. It boils down to what do you want? You can control what you can control, and you have to learn and take action in each part of your life. And the biggest thing I'll say that most people forget is they forget to focus on seeing how they can make more money. The more money you can make is the best way to pay off your student loans. So I hope this helps. This is my first YouTube video ever. I hope you enjoyed. Be sure to like this. I intend to add more videos helping you pay off student loans, make money, and live a great life. Signing off. This is Josh.